Hey everyone, it's James for the Property Education Company, and today I'm joined by Ben Mitchell from Your Key Advocacy, and we're going to be talking about what a buyer's agent is and how they may assist people in navigating the property market. So please note this information shared in the discussion is in general in nature and for education purposes only. So Ben, thank you for joining me today.
Thank you for having me, James.
So let's get right into it. Can you explain what is a buyer's advocate and how did you get into it?
Sure. Well, a buyer's advocate is basically somebody who advocates for the buyer. So most people will know, some may not, that a real estate agent is there and their job is to work for the vendor. They're not there to work for the buyer. They're there to facilitate the sale, yes, but their job is to get the best result for the vendor. So I am there helping the buyer, so representing buyers to make sure that they're able to navigate the market, to help them avoid any common pitfalls, to guide them away from poor quality property, or help educate them what the real value of a property is actually going to be on auction day versus what the quote range might be.
Right. So that's a broad spectrum of things that you can help a client with. And understanding, having gone through the process myself, and you helped me tremendously getting my first. When it comes to being a buyer's advocate, what were the steps or what's your journey to get to where you are today?
Sure. Well, I'll go back to right at the beginning. So my background is actually in real estate. My first job in real estate, I was a little 21-year-old rookie. It was just before the GFC. I was working in Auckland. I'm a Kiwi, and I was selling CBD apartments, but I was helping people who had purchased investment properties off the plans. Interest rates were starting to go up and they needed to offload these investment properties. And here was this 21-year-old kid coming along telling them, yes, I can help you sell your property, but I'm going to sell it for $150,000, $200,000 less than what you actually purchased it for. And I'll charge you for the privilege. So that was a very big lesson in empathy, but it was also a big lesson in what not to buy. And that is something that all these years later has actually stuck with me. It's probably stayed with me and it's helped influence why I want to help buyers and sort of steering them clear of poor property decisions, because we are raised to just get your foot in the door. Any property is good property, and that is not the case.
Thanks, Ben. From a general perspective, what are the sort of ways a buyer's agent may assist clients through the process?
Look, everybody's got different goals in life, so you have to work with them. Some people, it is purely about capital growth. We want to buy a good quality asset that's always going to grow, but they might not be able to afford that where they live, so they become rent investors or they move further out. Some people might say, no, I really, really want my smashed avo on toast every Saturday morning, and therefore I have to live in South Yarra or Paran or Fitzroy or wherever it might be. So you still have to work with a budget, but my job, I guess, is to help influence or educate people so as that they're balancing budget, investment, and lifestyle. So it's a hard question to answer because there's no blanket rule. But if somebody is looking for those sort of inner city or inner suburban apartments, then definitely the older stuff is something that I would guide people towards. If you're looking in some of those big, massive towers, you've just got so many apartments in there. You've got all the bells and the whistles. The owner's corporation fees are significantly higher than the older blocks. The apartments are significantly smaller than the older blocks, and you're probably going to get zero to minimal capital growth. In fact, I've seen often they go backwards. So if people are looking in the suburbs, I'm definitely recommending some of the older stuff. Sometimes I will help people see other suburbs and the potential that they have. I had a client recently that was looking in Richmond, and that's really where they wanted to be. And Richmond's a great place, but it didn't suit what their longer term goals were in terms of having a family. And I recommended some suburbs a little further out, Clifton Hill, Northcote, Preston, where you got a similar sort of property for a similar sort of price, but it was on much bigger land. And that was really important to those clients. And we actually ended up purchasing in Clifton Hill rather than right in the guts of Richmond, if you will. So my job is about helping people understand what their actual purchasing power is and then letting them look a little bit outside of the box. It's always their decision. I'm just going to give them the information so that they can at least make an informed decision.
So you mentioned helping clients understand their purchasing power. From a general standpoint, how does working with a mortgage broker support that process?
Well, it's really good working with mortgage brokers because there's a lot of clarity there. And I'll jump forward to the tail end of a negotiation. And if I've got direct contact with the mortgage broker and I've worked with the mortgage broker on a number of occasions, like I have you, James, it's really good to have a frank and honest conversation with the broker. Say, hey, we found this property. Here's what the quote range is. Here's where the value is. In fact, I'll even send my report through. These are the comparable sales. And if we're putting an offer forward, do we need to have a finance clause in there? And I'll obviously be guided by the mortgage broker. But when you are at that tail end, it's not always about the number. I've won properties at a private negotiation situation where I've had somebody beat me by $10,000, but I've had no conditions in my contract because of my working relationship with a mortgage broker. We've been able to get around that and have certainty that we're confident in the numbers and that it's going to work. And we've actually won the deal over somebody who had a 2-week finance clause. So that's one reason why I love working with mortgage brokers, because you've got a lot more clarity.
We've seen changes in interest rates recently. From a general market perspective, what are you observing and how might that be influencing buyer behavior?
I only work in Melbourne. In the sub 950,000 market, it really hasn't had any impact whatsoever. People are still out there and they are buying. And there's a number of reasons. You've got the 5% first home buyer deposit scheme. I went to a 1-bedroom flat this weekend in Collingwood. There must have been 50 people in there. It was just crazy. And I've already got a copy of the contract. It will sell in the next day or so. Now, if you're looking in the market above that, say around houses around the 1.5 mark, it's a very different marketplace. If you've got that sort of money out there, now is a really, really good time to buy because people are hesitating. Interest rates are having an impact. Vendors are realigning their expectations as well. It's an opportune time to swoop in and get a really good price point. Melbourne is so undervalued at the moment compared to the rest of the country. And even with interest rate and instability out there, it is a market that is going to increase. So I'm definitely seeing a lot of hesitation, but that means there is a lot of opportunity as well.
So, in your experience, what type of buyers typically seek assistance and what are some of the common challenges they face?
Look, I'd say over 50% of my clients are first-time buyers, and their budgets can vary as well, anywhere from sort of 600,000 up to 1.5 million, as an example. I'm also dealing with family upgraders, so upgrading into their second home.
Okay, for someone who is just starting out, what are the sort of general steps they could consider before purchasing a property?
Yeah, the consistent theme across all different client types is I don't know how to value the property. I don't know how much it's really worth. I don't know how to talk to and negotiate with the agent, or I just keep missing out at auction. Why?
Yeah.
That's generally the theme. So the first step that I do with my clients, I call the initial research, which is basically education. So I don't look at what's on the market. I look at what has sold. So if somebody's looking in South Yarra, for example, I will show them all of the properties that have sold in South Yarra that fit their brief and show them that they're actually selling $200,000 above what their limit is, even though that's what they might be quoted as. And I'll show them what is in their budget that's selling in South Yarra. And then I might do some research on some surrounding suburbs. So I might go over Dandenong Road, heaven forbid, into St Kilda East or up to Caulfield North and show them what's actually selling there and show that what they're after is actually selling well within their budget. And maybe it's actually even better long term in terms of capital growth wise. I'm not going to make the decision for my clients, but I'm going to give them all of the information so that they can make an informed decision about what it is that we're looking for. So that's the first step that I always do with my clients because that shows us what our true purchasing power is going to be.
So some people ask about the actual cost of engaging a buyer's agent. From a general perspective, how should people think about the value of those services?
It depends. If I'm going in to negotiate for them and it's in a property we were talking about before, say at the 1.5 mark where there is a lot of hesitation out there, then absolutely I will probably save that and more in terms of the negotiation. Real estate agents, it is their job to negotiate day in, day out. They're very good at it and their job is to get the best result for the vendor. I'm not going to stand here and say I'm going to get anybody a bargain. That's not the case. But I will be able to negotiate a much better price point than what a buyer who doesn't do it day in and day out might be able to do. But if somebody's looking at quality property, and I really like to buy quality property, my job becomes coaching my clients to see where is the sale value going to be and why. So is that if they're at auction, they're prepared for it. The worst thing you can have on auction day is be unprepared for where it's going to go. So the value isn't just in saving people money, but it's actually about getting them into good quality property.
So for viewers who may be early in the property journey, what are sort of general consideration they should keep in mind when evaluating properties?
Well, the first thing is setting realistic expectations. So I spoke about the initial research piece that I do. Do that yourself. Go and look at the sold data and see how that translates back to what it is you're looking for. But just because a property has sold in the area you're looking for your price point doesn't mean that every property will. That every property is different. If there is one property that is sold for significantly lower than the rest, don't get excited. There's probably a reason why. Look at the condition of the property. Look at the pocket of the suburb that it's actually in. Is it on the train line? Is it backing onto an industrial estate? Is it on a main road? All those sorts of things. But do go back and look at the sold data and see how that reflects back to what it is you're looking for and your budget.
Right. Well, I want to finalize with a few bits and pieces now. So tell me, if you had any client approaching you for the first time, what's the one thing that they wish they had already done or wish they were already going to ask you as the first question?
The thing that they wish they'd already done is that initial research piece, understanding their true purchasing power. And I think what people do see value when I first speak to them is just a bit of clarity. And you can often see the weight lifting off their shoulders, like, oh, finally, we've got somebody on our side who's actually going to get us an outcome. Sometimes I tell people what they don't want to hear. I know I would love to be able to buy a 4-bedroom house in Fitzroy North, but maybe I have to realign those expectations a little bit. And if the 4-bedroom house is really important, I will show them which suburbs that's possible in, or maybe we're dropping down to a 3-bedroom townhouse. I don't know what it might be. Occasionally somebody's on the brief and they're like, we just missed out a couple of times, only just, in which case it can be a different conversation. It can be different strategies involved that I would implement in the search. But every situation is different. Every buyer situation is different. Every vendor's situation is different. Every agent's marketing strategies are different. And when you are dealing with vendors and vendors agents, you do have to have some, I guess, emotional intelligence in terms of what the vendor might be going through. What are their circumstances? Because that can really help you in terms of how you position yourself in a negotiation as well, thinking about the other side. But you've also got to think about your competition.
Exactly. I knew when I bought my place that it was a deceased estate and the vendors, they were quite old themselves and they just really didn't want to deal with the hassle of a long drawn out process. So I offered what I could at the top of their range as well as a really quick settlement and they were willing to accept it. Just happy to go ahead with it.
It's not always about the money. Sometimes it's about the bird in the hand.
Exactly. Now, before we wrap up, what is the one general piece of guidance you think is helpful for people considering purchasing a property?
Even if you are an investor, always think like an owner-occupier. Always think like you're going to, could I live in this? Because when you are investing, a lot of people will, yes, think about the cash flow. You've got to think about the demographics of the tenant that you might be getting as well. But you've also got to think about the future. If you're buying a property that's purely just on cash flow, but in 20 years' time, you want that to have grown. So you've got to think, what do people want to live in? Whether you're an owner-occupier or whether you're an investor.
Thanks again for your time today, Ben. For anyone watching, this discussion is intended as a general information only. It's important to consider your own circumstances and seek professional guidance before making any sort of property or financial decisions. If you have questions, feel free to reach out and we'll be happy to point you in the right direction. And I hope everyone has a great week. Thanks.
Thank you. Thanks, John.
Bye.
See ya.